Thanks for joining, everybody. Excited to put this on. We've got some great speakers and people that we've known in the industry for a long time. Sherry, we've just met. My name is Julian Kwan. I am co-founder and CEO of InvestaX, which is a Singapore licensed tokenization SaaS platform, and IXSwap, which is an automated market maker for security tokens. We'll talk a bit more about that today. The rest of the speakers are on screen: Aaron, Marcel, Scott, Sherry. We are specifically here today to talk about real tokenization use cases from real people that actually have platforms, technology, licenses, and real products. There's been a lot of action, let's just say, this year, especially around real-world asset tokenization, also known as security tokens, also known as digital securities, also known as digital asset securities. A few different terminologies, which shows that we're still fairly early in the industry. But today is really about letting our community hear. First of all, I'm going to give a quick update of the whole macro environment around, and I'm going to call them security tokens, STOs today, security token offerings for short. And then let everyone, the rest of the speakers, talk about their products and their platforms, so we can actually make this really interesting. So the quick history of the security token industry. In 2017-18, we had the bust and boom of the ICO market. The first STOs were actually failed ICOs. And that was basically because people said, there's no value in these utility ICO coins, let's sell securities. The problem was, it was the same token, so the quality of the S was terrible, so no one bought them. The other challenges at that point in time, you had the SEC, who were creating a lot of havoc today. But at that time, they were chasing these projects around saying, you know, that ICO was actually a security token offering and it wasn't launched, marketed, issued properly. Therefore, I'm giving you a big fine. And then some people thought the STO industry was illegal, which doesn't make a lot of sense because the securities tokens are securities. There are regulations out there in the world. Securities regulations don't reference paper. If you issue a security token or a security, as long as you follow the rules of securities, you're allowed to do that, especially in most jurisdictions, specifically in Singapore. So 2018 to 20, you had the first infrastructure companies doing these token issuance platforms. They helped people tokenize their assets, but they didn't have any licenses. So there was a good addition, necessary infrastructure, but it was limited. And then over the last couple of years, you've had a lot more broker-dealers, exchanges, custodians with the technology and licenses to issue, trade, and custodize STOs. So we're now at a point, 2023, where we with a combination of 4 or 5 years of builders, Marcel and Scott in particular, and Aaron and myself have been in the trenches for many years, doing the hard yards, getting all the licenses, building the tech. This has now come to the marketplace. So now there's actual infrastructure rails to do this legally and compliantly from an end to end. You have much higher quality STOs coming to market, investment banks, real estate groups, private equity groups, etc. So, and I think on a combination of last year's crypto meltdown being one element, and just maturation of thought around tokenization of real assets is not cryptocurrency, even though we use the same architecture or the same technology. Now we're seeing what I consider kind of the birth of, or the growth of tokenization. So as Larry Fink says, BlackRock, the next generation of securities will be tokenized securities. And so what we want to do, and our position here as a company, is to help anyone that wants to issue and trade and custodize a security token legally and compliantly, all in one place. And we are built kind of open architecture. We want to work with as many good platforms around the world, Token included, Equanimity included, and good products, Sherry's product included. And we really want to build this kind of new financial world out with great partners. Shafali, next slide, please. Okay, so, you know, challenge, and we focus on private markets, and I think everyone here is sort of focused on pretty much predominantly the same thing. We want to take these paper-based traditional finance assets that are illiquid and immobile and one-dimensional, and we want to use blockchain and smart contracts to issue shares in those same assets, but digitally, so they could interact. And so they're issued as security tokens, and they can interact with all the other digital assets in the space, creating much more efficiencies, digital versus paper, but also the ability to then create new investment structures with tokenization. So a better VC fund, a better real estate fund, programmable debt and equity, new forms of investment structures, which I think is really exciting, and something that most people aren't really even thinking about right now. But when we actually take a quick snapshot of the history of the public markets, all the significant expansions of capital when we had a new technology marrying those marketplaces. The best example I can give is the development of the ETF structure. So in 1979, I think, the first ETF was only $6 million. Everyone thought it was a failure. Now it's a $7 trillion industry. So that's what I think every day. I think we have a chance at bringing tokenization, the next types of real estate funds, the next ETF, and bringing it to marketplace and creating something that's going to have just exponential value. So that's what kind of I think everyone here is all about. Next slide, please, Shafali. And so what can be tokenized? I think people are very confused at times. Simply digital shares versus paper shares. So essentially, you can tokenize anything: debt and equity and real estate and venture capital. We've got carbon credit funds. We've got equity in membership clubs. We've got real estate. We've got startups. We've got all kinds of stuff being done. Commodities, you name it. People are putting this out there into the marketplace. So it's asset agnostic. There are people even tokenizing publicly traded assets. Just as one example, JP Morgan has built a tokenization platform called Onyx. It's a private blockchain that's got its own issues. But anyway, they're going ahead. The reason they're doing it is because, they told me, a lot of these even though the public traded assets are not very usable, so in a tokenized format, they could make these assets multi-dimensional. Maybe they could borrow on them, or they could do these things with these assets they couldn't even do. Again, I think most of the people here are focusing on the private market predominantly, where there's a huge opportunity. And for those that don't know, the private markets are about 6 to 7 times bigger than the public markets. And again, all sitting over there on paper. So that's why we're here to build these infrastructure rails to tokenize all those assets. Shafali, next, please. So what can be tokenized? I think there's some great reports that came out from a lot of leading institutions. I think this one came out of Citibank. There's actually been 3 or 4 major reports that have come out in the last 30, 60 days. One was from Binance, which was great, showing that the crypto universe will start issuing security tokens. One from JP Morgan and DBS and the MAS about institutional DeFi, like using decentralized finance applications, marrying them with TradFi assets is going to be huge. That's great. That's all speaks our language. We also have Bain put out the Web3 private equity report, which basically states that there's huge opportunities for private equity to tap into Web3 and all this new technology and all the value there. And then there was one more recently, this week, I think, from Citibank, which said there's going to be $5 trillion of tokenized private market assets in the next 5 years or so. Yeah, next slide, please, Shafali. It's coming down the pipeline. And this is the biggest opportunity in the financial markets since, I don't know, since a long time. I think since electronic trading, since what we saw in the public markets. So I think this is growing. I think McKinsey predicts the private markets to double in size in the next 3-5 years. It might even be bigger with all the recent sort of money printing. But the point is that the total addressable market for this is insane. It's just kind of unlimited. Next slide, please, Charlie. And one thing I think is really interesting that people should take away from this is that from a regulatory perspective, regulators are always looking for transparency and investor protection. And issuing securities on blockchains is much more transparent for a regulator than it is issuing them on paper. We will get to a point where setting up a new fund or a company in any jurisdiction, there'll be no more paper. It'll only be in as security tokens. This is already happening around the world. There's countries like Switzerland that have sanctioned security tokens, paperless-based offerings that are real equity and debt in real assets as the investment structures. Other places like Delaware, Wyoming, etc. And that's what we thought like 4 or 5 years ago when we transformed our business from one of the first real estate crowdfunding platforms into a tokenization platform. We thought that the regulators are all going to support STOs because it's a better system. It's easier for them to manage. It's more transparent. It's cheaper. Instantly, they can find out who owns shares, who are directors, which they can't actually do today. If you go to try and find out who are all the owners of Singapore companies right this second, because there's shares being sold, there's transfers, director changes, you don't actually get the full picture. But in an STO world, you'd be able to get a lot more granular on that. So we always believe the regulators would sort of support this. And, we haven't publicly announced this yet, but we actually, the MAS in Singapore put out a consultation paper 4 years ago that said there's one type of exchange license. We get blockchain, and anyone who knows anything about Singapore and blockchain knows that the government here is super supportive and have been hard at this for years. We get blockchain. We think that tokenized securities in an exchange, brings a lot of transparency. We should allow retail investors access to these assets as well. Moving along, the industry is now starting to grow quite rapidly. Again, I started off this, and I'll try and wrap up in a minute, with how we got to this point. 2018, the very first STOs failed ICOs, then no infrastructure, then SEC chasing everyone saying STOs are illegal. That was 2019. You can see what that certainly didn't help the market. Then we had 2020 and 21, and we've now starting to see in 23 exponential kind of growth because the infrastructure's here. And the groups, again, that are on this phone call, the speakers today, which you'll hear from, they've done a lot of the hard work to give companies, issuers, asset managers, fund managers, the confidence that if they did this, it would be legal compliant, technically enabled, it'd work, and everything would stack up and not just empty promises that were flying around in 2018-19. Shafali, sorry, next. So just a couple of real use cases from our side. The Singapore government launched their first onshore fund vehicle called the VCC, the Variable Capital Company, and they gave us an actual fintech grant. So we're actually paid by the government per se to tokenize this vehicle with UBS and State Street, because the government here wants to see a tokenized VCC for all the benefits that tokenization brings. We're now moving into this, I think the next project here, really interesting. We did that on a public and private chain and then gave our findings, right? We gave our findings back to the regulator and said, this is good, this is bad, this is what works, this is what we think should change to pave the way for the tokenized VCC, which can be used for anything, real estate, private equity, et cetera. So, if anyone has any doubts about, regulation support for STOs, some governments, great governments like Singapore, are actually funding the development of this with startups to make stuff happen, which I think is fantastic. Sorry, next, Vic, Shafali. Sorry. Again, there's all different types of projects going on. There's private equity funds, there's real estate funds. I think the most prominent recently was KKR in the US, and Hamilton Lane, another big private equity manager, have tokenized portions of their fund, and then they're bringing, I think, that down to like $5,000 investments, which I think typically was $250,000 per investor. You're now starting to see, very high quality groups issuing again because there's the infrastructure for it. The next one and the last project I'll talk about, because I want to make sure that everyone else gets some time. Next slide, Shafali. And so what's this project here? What we did was, this was more just to show people that, we believe in a world of tokenization and a convergence of all these digital assets, digital currencies, security tokens, NFTs, DAOs, all connecting and converging on public blockchains. So we bought a yacht club, and we put it into a Singapore company, and we tokenized 49% interest. So you can actually buy an STO of a share of this NFT in an STO format. There's going to be a lot more of these, ideas popping out and coming along, and there's just some sort of real life examples that we've had on our platform. So enough speaking from myself. We're going to move through this pretty quickly, and obviously you can reach out to all the people here to follow up on anything that we're speaking. I'd like to maybe next introduce Scott, or Scott could introduce himself, his platform, what they're looking at, maybe one or two real kind of use cases that he's seen, why people did that, and then maybe Marcel, and then Sherry, and then Aaron will wrap it up with some Q&A. Thank you.
Thanks, Julian, and thanks for the invite. Great to be here today with a group of like-minded pioneers in this space. I just want to echo a lot of what you said in terms of the maturing of the industry, and I think using that kind of where we've been, what's happening now, and explaining without naming names and going into too much detail, a couple of sort of two different strands of what we're seeing in terms of the maturing of this market and the opportunities that are out there. Just quick little bit of history for those who don't know Toko. So I'm the founder, Scott Teal, formerly a partner at DLA Piper, global law firm, founded Toko within, and it's still part of the DLA Piper corporate group. And we, again, as Julian, you alluded to, the importance of doing it right was, really our objective. We saw a lot of what was happening in 2017, and it was concerning. And so we set out to build the world's most sophisticated, asset creation engine in terms of, building assets that do, really drive those regulatory objectives around transparency and investability, and all of the things that come with investor protections. And also liquidity. One of the greatest barriers we saw to liquidity in private markets was just information imbalance, where people just didn't know what it is they were going to invest in, or the cost and expense of finding out what it is you're going to invest in was so high that either you could only participate in substantial size investments, or really it just wasn't worthwhile because of the friction in the process. So again, what we've done with Toko is we've sought to create a virtual asset that provides a lot more information to the appropriately qualified investor. So if it is a security token, a lot of markets, you can only sell them to professional or accredited investors. So we have whitelisting functions where those investors can come in and have access to the information in the private chain layer, where the tokens themselves are deployed onto public chain, but the sensitive or accredited investors or whitelisted investors only section of Toko will control who can see the core attributes of the deal, and whether that's sensitive information or financial information that gets accessed through various control mechanisms. And so what we designed Toko with compliance in mind, as you would expect from a global law firm working on this solution. I can remember early days getting a lot of curious looks from colleagues, partners, management. What is it you're trying to do here? I was a technology fintech lawyer, now trying to turn technology entrepreneur. But I think what's now happened through the industry's kind of twists and turns and the bad news stories and the regulatory clampdowns around the world is a recognition that the only way this is going to really progress is in a compliant and regulated way, and that's always been our ambition. So I guess just pivoting to what's happening in the market that we're seeing, I'd separate our client base, the things we're working on, into two categories. One is TradFi, or traditional, large institutional players who are now realizing this technology is going to enable them to do the types of things that they were already doing, but in ways that are either more efficient, faster, more accessible to a different pool of investors, be able to create products in a slightly different way, lower bite size, things like that, to increase the investor pool. And so we do have a lot of projects that I think fit squarely within that category. We're working with a very large European fund manager at the moment on a tokenized fund structure that we're hoping to launch in the next few weeks. And as part of that journey, what we've been really doing is wrestling with how does it work today, and why does it need, and how can it be done better than that? So again, we've built features within Toko such as dynamic token supply management, so that open-ended fund structures can be very flexible, allow money to come and go from the fund, and for the issuer to control the number of tokens in circulation based on money coming and money going. So we've built things like dynamic supply management features and functions where we're putting lots of information on chain as well. So things like daily NAV calculations that are then getting put on chain, not only useful for somebody who's thinking about, maybe selling, where's the NAV today? Oh, I can see it on my token, same place as where my asset's held. But it also provides historical data tracking and provides the ability for would-be new investors to come in and very quickly, again, not have to go and start searching for information, but all the relevant information is there so they can see it. And so we're really looking at, cap table management. Transfer agent role is an interesting one because the blockchain seems to do a very good job of cap table management in a way that is traditionally being done by external third parties, whereas I think this is an area where the technology almost incidentally does a lot of that work in an immutable way, which is obviously going to be very, very useful from a regulatory compliance point of view as well. So there's that whole kind of side of the what we're working on in Toko, which is the digital evolution or digital revolution that's happening within traditional markets. And the Larry Fink quote there is a good example of that, where very, very large traditional players are suddenly on board in terms of the digitization of their industry, which we've seen in many other industries is going to be happening in this tokenized form. And then the other side of what we're seeing, which perhaps is where maybe my passion lies and some of the team gets really excited about, is people that are now building entirely new products because the technology enables greater participation in the process of actually building new financial instruments, building new economic models. And because of the efficiencies and the way the technology works, it's now possible for these people to actually participate and build things that frankly used to be the domain of traditional finance only. And as part of that, we're seeing some very, very interesting, financial models that are there's going to be disruptive in some respects. So I can see things like traditional bank finance. We're working on one project, which is a replacement owner-occupier finance solution. So kind of like a mortgage, but it's a two-sided platform deal with investors and owner-occupiers having a relationship. And that relationship is very much more balanced than a traditional bank mortgage and mortgagee relationship, where what's good for one side is maybe bad for the other. We're seeing this product which actually shares not only things like a return on investment for capital, but also sharing in the capital appreciation of the underlying asset, which is just a fundamentally different way of looking at things like bank finance traditionally. So I think there will be some new and creative ways and things that will replace some or provide an alternative way of doing things that are done traditionally today. But the other thing that we're really focused on is then you can get different numbers around this, but the number we've landed on is somewhere in the region of $600 trillion worth of investable but currently entirely illiquid assets, things that are of a quality that frankly aren't currently being serviced by the financial services sector as it exists today. There's lots of good reasons for that, but actually tokenization and technology and the Toko platform is now providing people with an opportunity to actually release the value in those assets and to create products for people to participate in a fractional way. And so quite a few different themes there, and conscious of time, I'll maybe pass on to the next.
Yeah, great. No, that was really exciting, and I think same DNA there. I think people are just scratching the surface and don't understand that there's a way to start participating and create a new and a better way of doing whatever business model they have. So they should reach out to people on the call to discuss that. All right, Marcel, over to you. Let us know what the most exciting projects you've been working on recently, and maybe you can share something about that.
Thanks for the intro, Julian. I will make it quick so I can give more time to Sherry, and we have some more Q&A at the end, because I need to pick your guys' brain as well, because from a regulatory perspective, legal, etc., we have a few pain points which I need to see all the jurisdiction, how you guys solve it. So I'm the founder of Equanimity. We started 2016, 2017 with the whole tokenization space, from ICOs to STOs. I think we all have the same mission that with education of the blockchain space, what is a wallet, how to do self-custody, which tech to use, which legal to use, and also how do you solve compliance, all these pain points. We need to solve that. We ourselves build the tech for that. We have a different approach. We are not a platform. We just give tech to the issuers. We help them to do a registration here in Liechtenstein and other jurisdiction as well, because the registration process is somewhat similar. The basic is always internal control systems, risks, how do you manage your company, how you fit in proper, etc. So that's our USP here. And I'm just curious what the other platforms are doing, and I will jump in at the Q&A later with some.
Yeah, well, I was just going to say, maybe you could just tell everyone here, like, something you've tokenized that you think is the most interesting, and what was it?
Look, we have the traditional pain points, right? Equity. How do you get into a private company in let's say in Singapore or India? How do you get on a cap table with a small check, right? Before that, you have to have an entry size of 50K, 100K, and we want to break it, or we want to allow everyone to break it down to 1,000. Use the tech, use the compliance, just make your own qualified decision if this investor can join. And if you have a wallet, that's it. You have a KYC wallet, it has been onboarded, give it opportunities, can be equity bonds, can be private debt, can be trade finance, it can be money market fund like infrastructure. So you put it in your slide yourself. It's just a matter of education, legal, tech, and having everything in place, either as a platform with a legal umbrella, so you don't have to go through a registration yourself, you don't have to make a prospectus yourself, but I think both will coexist. And the most interesting part will be that those hubs will interact with each other. Yeah. And I think we will be able to do that in the future also from a regulatory perspective, that you have your data and you decide where this data goes to, and that you don't have to make KYC 100,000 times.
But so, you know, and I haven't caught up with you for too long. It hasn't been too long in the blockchain space, a year, but how many tokenized offerings have you got on the platform right now, on your platform? So
at least our tech is used to tokenize around $70 million US. There was one big offering for, which was a private round for a big blockchain project. But we have two equity offerings where we have around 1,000 investors onboarded and also distributed those tokens. We have trade finance as backed. We most probably gonna close a bigger project now, which is the money market fund structure, where we have a bigger problem. Let's say, how do you route $1.2 billion from fiat to crypto, and also from crypto to fiat again, right? That's something of like infrastructure. How do you, what happens in traditional finance day to day? How do you make that how do you bridge that? Which tech, which legal, which bank? Who wants to touch that? Who wants to understand it? And I think that's the biggest opportunity at the moment, that people understand, want to build tech, want to build the partnerships, to not be that black sheep or blockchain. But you know, you remember when you opened the bank account in 2016, everyone was like, but Bitcoin, what? Blockchain? No. But now people want to understand compliance, want to understand, and that tech was easy, I think. I would say tech was the easy part. Now it's about legal compliance, fiat on-ramps, off-ramps. You can tie in an IBAN to your wallet. You can maybe do that with Pay Now in the future. So the UX will also be better with account abstraction. It gives a good way of security, putting thresholds on spending limits, etc. So we are getting there. It just took a lot of time and a lot of pain and gray hair.
And I think you guys are doing a great job, and I think you got the right type of DNA and structure, and how you're tokenizing a bunch of these startups. I think it's really interesting. And I think you said people are investing as small as like $1,000 into these startups.
Yeah, look, my vision is that anyone from Indonesia or wherever in Asia can onboard a wallet and acquire share in Europe. And our roadmap is to have 2 million wallets KYC by 2030. And everyone should be able to allocate at least 500 euros or USD per year. And that's a reasonable deployable capital. And I think it's just inevitable. Good opportunities, we will share them across platforms or tech hubs. And I think people will understand once they're onboarded with a wallet, know about self-custody, know about counterparty risks. That's the fundamental things I think is happening the last 6 months, which is beautiful for us.
Yeah, and we're excited that iSwap's partnering up with your platform, and I'll let Aaron talk a little bit more about that before we get there. So yeah, in respect to time and trying to save a little bit of time at the end for some Q&A, Sherry, welcome. Could you please introduce yourself and tell us about your exciting product and how you're using tokenization, and what does it mean for everyone?
Awesome. Well, thank you for having me here. Hi, everybody. I'm Sherry. I'm the CEO and co-founder of Blue Jay Finance. We are an on-chain fixed income product that's focused on bringing different types of assets like private credit on chain so that people can invest around the world. Blue Jay is actually more of a distribution platform. So we focus on the kind of last mile go-to-market piece to really truly understand the users that are coming in that want to invest in these kind of assets. And then we plan to work with hopefully guys like you all on the call today to actually bring those kind of tokenized assets onto our platform. I guess really quickly about myself before getting into crypto and also Blue Jay. I actually worked in fintech for a couple of years, specifically focused on emerging markets. So I was actually on the payments team, Google Pay team, working on India for a couple of years. And so what really excites me actually around this is actually from a real use case perspective is actually the opportunity from a financial inclusion inclusion angle. So one of the areas that we're specifically focusing on is democratizing private credit, especially for players like SMEs, small to medium enterprises that have traditionally had some kind of gap or difficulty in accessing capital from banks traditionally. So just as some numbers, I think the estimated gap from a credit perspective in Southeast Asia alone is something like 300 to 500 billion. So this is, I mean, tons of businesses that never see the light of day because they're not able to get the debt capital that's required to be able to grow and scale. And oftentimes this is because there might be, I mean, scaling issues from an underwriting perspective from a bank, or some certain, I guess, more traditional institutions may not necessarily understand how to underwrite tech risk, right? So if there's like, for example, like a solar farm or some kind of ESG related company, they may be an asset class is a little bit more difficult to understand and underwrite than something like maybe like real estate. So that's on the I would say maybe the borrower or the asset side of the platform. Now on the investor side, we focus on giving like a more seamless experience for people to invest in these like kind of, I guess, private market assets. So it's a very simple process. You have a wallet, you have stable coins. In our case, we actually have our own stable coins that are locally denominated that you can invest in with kind of limited or less FX risk than just pure US dollar. And it's a much more seamless experience, and you kind of do that from anywhere around the world. So basically, we really truly believe that the economy is globalizing, so we need global money to make that happen. So far, I mean, we're a pretty new player on the block compared to all of you guys who have done amazing work in pushing this industry forward. I think the last couple of years we've truly benefited from that, and we just launched our platform really just this last quarter. It's called Blue Jay Earn, but within the first 8 hours of our first pool that we launched, we actually fully subscribed it. We worked with a Southeast Asia alternative lender for SMEs to actually create a 7% corporate bond that was made available on our platform. So we're really, really excited about this space. I really think from, a perspective of where this industry needs to move forward, it's really about, not really about the cryptocurrency part, but how do you actually use the infrastructure, the rails created by crypto to just make the capital allocation process so much more inclusive, so much more efficient, so that more and more ideas get funded and more and more people have the investment opportunities to truly realize their financial goals.
Yeah, great, thanks. I think you said something about we need some new currencies. I think everyone agrees, except maybe the USA, but they're at the end of their cycle, but we'll see how that plays out. Yeah, great. We're looking at we're excited to see how we could get your products up on our platform. I think the stable earn kind of projects in terms of return profiles, certainly something that the world's trying to hang on to in this super volatile kind of environment. So yeah, thanks for sharing that. I'll pass it over to Aaron, who helped us as co-founding on IX Swap, and I think maybe I'll just quickly lead in. Tokenization of real world assets, we think, has multiple layers of value. It started with this liquidity for liquid asset only mentality, and I think you'll start to see that there's multiple layers from that. 2 years ago, we were sitting around, people kept saying, where's liquidity? And they still say it today, actually. People turn up trying to tokenize assets that are private. No one knows anything about them, and they just fundamentally think that there's liquidity falling out of this sky, trying to throw money at their asset that no one's ever heard of before. Now, in 2017-18, there was a situation, let's jump to cryptocurrency. So in cryptocurrency universe in 2017, there was a super interesting moment where, to give you an extreme example, if you were a top 5 or 10 crypto and so they sat on these decentralized exchanges, and they basically were just listing boards, and there was no liquidity. So everyone used to buy crypto on centralized exchanges because there was liquidity. That was the only reason. It wasn't because they were pro centralized exchange or not pro or anti decentralized exchange, but the decentralized exchange, which is essentially a swap platform, had no market making. So we embarked on a mission to build an automated market maker, so anyone with a security token could start a liquidity pool. I think it's the killer application for the industry. We're just about to start working with Marcel on this, and obviously Scott and anyone else that we go there. And Aaron's here to tell you a little bit about it, and then we'll get into some Q&A. Aaron, over to you.
Hey guys, as really introduced, I'm Aaron, one of the co-founders of InvestaX. I've really been focusing on the sort of DeFi arm for security tokens right now at InvestaX and InvestaX. Yeah, and the launchpad, what we're really trying to do is to imitate what was done over the bull market over the last couple of years in the crypto space, right? And I feel a big issue that we are facing right now in the security token or real world asset space is that the demand for real world assets is still very minimal in the space because cryptocurrency projects are returning 100x all the time, right? I mean, for most of the crypto degenerate traders, they don't want to switch over to a real world asset paying 5% if they're getting 100x on trades. So this is actually leads me into why we started Launchpad and the kind of products that we want to launch on Launchpad. It's really going to be a lot of startup equity that we want to push out. And the reason for that is that if you look at all cryptocurrency projects, they're essentially startups, right? They're not, you know, your $10 billion company. Oh, well, some of them are now. But I guess when they started off as ICOs, they were really just startups. And that's the only type of assets that we see that is able to really garner that kind of demand and that kind of returns that early. Of course, risk for those kind of assets are going to be still significantly high. Which is why we are also working with other partners to bring more stable assets to the platform. You know, people like Sherry, who's really doing private credit, stable returns, and that's the kind of mix that we are really looking for Launchpad going forward. Hey, Julian, I'll pass it back to you.
Yeah. So yeah, I think that was the goal for us, is to build the first market making solution, and that would I think that's really exciting and hopefully helps the industry. It's and the issuance platforms who can throw back that problem back to the issuers, that they can solve the liquidity problem themselves by at least starting the first liquidity pool. But look, great, and appreciate everyone jamming in those. I'm sure all of you guys can talk easily for an hour just on your own platforms, but I think we did very well to kind of structurally hit this 45-minute mark without too much planning. So maybe we can open it up to Q&A for 10-15 minutes. I can see a few questions coming down the pipeline now. Let's just start then from the top. Whoever put them in first. Wondering what folks think about fees for on-chain real-world assets. Off-chain real-world asset fees will always be cheaper than on-chain. Yes, no. Scott, Marcel, any input on that?
It's an interesting question, because the problem as we get going, I think, with the industry is it looks like an additional cost in some respects. So some of the projects we're getting involved in, you know, I mentioned the transfer agents. I mean, you know, there are still a lot of ecosystem partners that are involved in deals, and then you add tokenization, and so it can look like an additional cost or an additional overhead or an additional intermediary in the process at this kind of nascent stage in the industry. What is very clear though is, as the technology evolves, as regulators start to accept that the technology actually does some of the things better than some of the intermediary functions, that large sections of intermediaries, and there's a cost element to that, but there's also things like time. So there's, you know, there's still a lot of things that settle on 3 days or 2 days, you know, settlement. So as those things start to become eliminated, I think we will see a substantial reduction in the cost base. And I mean, I think Julian or maybe Aaron, you've got a view on this, but we've been thinking quite deeply about the secondary market liquidity piece as well. And what's clear is that the secondary market infrastructure that's been built, not only for traditional assets and you know, liquidity for traditional liquid assets, is not a problem. You know, the market infrastructure that exists today exists because it's suited for those assets. That the problem we see with what's being built for security tokens is that it's not fit for purpose. I mean, you know, IXSwap and the use of automatic market makers, if you look at the cost of capital in traditional market makers, I mean, it's an enormous overhead. Well, who's paying for that? You know, it's effectively coming out of the underlying deals at one point or another. You can pretend it's not, but it comes out somewhere. Yeah. So actually, I think we are going to see a lot of cost reduction, but it'll be a little bit of a bumpy road to get there.
Yeah, Marcel, did you have? Yeah, I
will just make it quick. Maybe Sherry also want to add, because she comes from that space. I think hidden costs. All these hidden costs will go away. The transaction costs on public ledgers or public blockchains will go to 0.06. We see that with Polygon or any other EVM chain, which is somewhat distributed. but hidden cost. Get rid of the hidden costs, and then people will actually see, oh, I have an IPO, minimum is 1 mil. What if you have a mini IPO and you do tokenized offering and you can start 50 or 15K? That's where I would see we can have millions of these offerings.
Yeah, don't disagree with that. I believe technology will improve and fees will race to nearly zero. Sherry, did you have some thoughts on that? And then maybe Aaron.
Yeah, I can add a little bit here from my perspective, and actually I'm thinking specifically around like loan origination costs for RWA, as well as like the cut that normally you would take if it's off chain versus on chain. So I mean, I think long term, right? The fees should go down so much more when you're working in an on chain world, because the whole process is becoming way more automated, right? You don't have to necessarily take, let's say, like a 50 bips or more like origination fee for a loan, because you actually have a much smaller team with more automated processes, right? So you could actually run a quote unquote more profitable business without having that kind of spread when it comes to originations. Similarly, when it comes to like management as well, right? I mean, it's very, very common to see, I guess, it's kind of funny to say real world assets off chain, because I think they're just called assets, but like oftentimes if you're investing into them, you're paying a management fee of, I mean, sometimes 1% to 2%, regardless of what the performance actually is, right? That's fairly common, because again, if you have very few players providing, a kind of a rare kind of investment opportunity, you can kind of do that, right? Whereas now we're in a space where more and more players are actually coming on chain providing this, and so I would say that you get to a point where it actually makes it harder to kind of I guess have those high of kind of performance fees or kind of interest rates that you actually are taking of their particular loan. So I think long term, definitely it will become cheaper and cheaper to be able to do this on chain versus off chain.
Yeah, thank you, Aaron.
Yeah, I mean, today, I do think that it is probably more expensive to bring things on chain, purely because you're actually having to do the things off chain at the same time. So you're actually paying double fees for most of the things that we are doing right now in the market. But going forward, I really do think that on-chain activity would reduce fees significantly. I mean, just taking my example of even transferring a private equity asset from one person to another when I was at the bank. You either can't do it, or you have to sell off your asset at a discount at the bank just to sell it off to someone else, and then buy it back in the next account after that. I mean, what we're seeing in the crypto and the security token space, it costs you less than $1 to send assets across from one person to another. So I think that's going to change over time, and things are going to become a lot cheaper in the blockchain space.
Yeah. Cosmo, I know that we've only got another couple of minutes. I think we'll screenshot all of these questions and get back to George. We'll get Sherry to answer that question directly. I think Dinos has asked about, is there any trade finance or commodity trading STOs out there? Yeah, I think we've seen people trying to tokenize commodities, but Scott, Marcel, you guys got anything around that?
Yeah, and a mixture of, I mean, I'm sitting here in Dubai. We're talking to the DMCC, which is the commodities trading free zone here, about the digitization of that, which they're already doing, but also some more, again, in the more alternative asset space, some with an ESG angle. So, tokenizing commodities, potentially minerals or other things, but actually then building in a contractual agreement to not dig them up. So having a commodity that is going to remain in ground, for example, which is still gives you access to or ownership of the asset, but you don't have to actually destroy the planet by digging the thing up and the associated costs. So a mixture of both sort of traditional commodities tokenization plus also more alternative asset with ESG plays that we're working on.
Okay, great. Marcel, anything on that front, or are you mainly focused on startups?
No, seriously, we have a change here in Liechtenstein based on the blockchain law that the physical validator, which is a own role, has been kind of a monopoly now, because only one got it after like 2 years. So you can imagine how the process was, like, I guess similar to your retail license in Bahamas. Now they want to change that it's not mandatory to have a physical validator, meaning it could be any trustee, as long as you can safeguard the underlying asset, right? So it's always the redeemability of the underlying asset which is so critical. But Aaron said it in a private conversation. It's the utility after. So once you tokenize it, what do you do with it? And I think that's going to be the huge change with XSwap or any other lending platform where you always have transparent price discovery or underlying prices to use that token for whatever. But the origination for physical asset will be also more straightforward, hopefully.
Yeah. Okay, we'll get Sherry to get back to George directly with the last few minutes. Kenny, I see your questions. Yeah, so what's going on mainly is the tokenization of shares in special purpose vehicles. So I think we did 30 private equity real estate deals on our platform pre-blockchain. Every single time it's some kind of Cayman fund or trust or PTE company. And so the actual assets themselves aren't being tokenized, it's the share structures of. And then you have the same rights, links, etc., to the asset that any paper contract would have. I think that's the best way to kind of look at that. George's question, minimal demand. Why has there been minimal demand for real estate so far? Mainly because the real estate assets have been offering poor returns or lower returns than you can get in a public listed REIT. That's probably my overall situation on real estate projects being launched by people that aren't in real estate crypto. And I think you'll start to see much higher. You're starting to see it now. So I think the KKR or the Hamilton Lane, one of those tokenized funds, is a private equity real estate fund. I think it's 12, don't quote me, 12, 15% IRR, blue chip manager, real commercial assets. So it's just been a quality of assets and rich people trying to sell terrible assets to retail investors and failing dramatically. I think that's been the main one.
I'd add to that maybe just regulatory challenge. Some markets have been very slow to support. We've been working on deals in a couple of markets where there's very clear interest from both the issuer and also investor groups, but the regulators have just been, I think, terrified is probably the right word, and not prepared to let things happen. But that is changing. And another reason for Toko expanding into the buy market is the new regulatory framework here that's supporting. And obviously, there's been some positive news coming out of Hong Kong as well recently, with the regulators taking a more bullish approach to allowing real world tokenization. So I've seen lots of attempts to do real estate deals that have struggled because of regulatory uncertainty or paralysis within regulatory approvals processes.
Yes. Aaron, Marcel, any comments on the real estate issues other than what's been said?
Not on my side on that part.
Cool. Let's get technical for the last one, and then we'll make sure Shafali gets back to everyone else who has asked questions, because I think we've only got time for one more. But let's maybe get into the technical side here. So there's a question from Bill. It'd be helpful if we, as an issuer, could tokenize real world assets as ERC 721s. These asset tokens would behave more like the underlying assets they represent. Do you seem catering to such issuers? So maybe Marcel, you could kick that off, because I know that you're deep in the technical woods.
I mean, I think everyone is offering somewhat of a standard in the Solidity contracts. I think it might be tweaked to certain jurisdictions also. So I have the discussion with Aaron all the time, who will bring out that standard, or which coalition of platforms, hubs will actually agree on one standard, which can be used in any jurisdiction with any asset. So it's easy to say, but if you practice it in real life, it's not so easy.
Maybe I'll jump in on that one. So Toko's architected to not only allow you to deploy onto different chains, but also different token standards. So it is literally a pull-down menu as you're creating a token within the platform. You can pick, we've already integrated Ethereum, Polygon, Hedera, and Algorand. So you can deploy on those chains, and even within there, in fact, 721 was the very first token standard we did, because it was a fractional real-world art piece, and so we broke up the artwork, and the 721 allows you to embed a piece of the picture. So we actually use that on our first transaction. 721 is, however, essentially designed for non-fungible tokens, which is fine, but you need to, essentially what we do is we work with our issuer clients to determine a number of factors and then help them pick the appropriate chain and the appropriate token standard to meet their business objectives.
Yeah, okay, great. Look, I think we're going to wrap it up there. The rest of the questions, we will get back to you guys directly. Yeah, appreciate everyone who spent their valuable afternoon with us today, and all the speakers. It was great to catch up with you guys and hear about all the progress. Anyone who's listening, please reach out to our team if you want to connect with the speakers if they're, I think we've got all their details for you, and we should do this again soon. Thank you very much for coming, everyone.
Perfect. Cheers. Take
Thanks,
care.
everyone. All right.
Having us.
Thanks, Gary. See you later.
Thanks, guys.
Thank you. Bye-bye.